The next 20 or 25 years is going to create more wealth than perhaps the last 75 years since independence. This is the biggest ever good news for minority shareholders because they will get a part of it. And even today I feel after the big corrections, I'm telling you 50% of small and mid-cap stocks are overvalued today. So there are instances where I invested and the stock has moved by 60, 70 times in 3-4 years. Bitcoin, they can give me at $1 per Bitcoin. I will not buy it because I don't understand this. I don't see any fundamentals in that. Gold also I don't like. We are not wearing any gold. My wife, Litty, is there. So we need not worry about thieves coming home and taking away the gold. We don't have any gold at home.
Welcome everyone. So, Porinju Veliyath sirna ഒരു introduction വേണ്ട, so I'll dive right into my questions. So, over the past decade, we've had an incredible run where massive wealth creation was done. So, and I think when you look at the Nifty returns, there's been around 13% average annual return over the past 10 years. Do you expect this trend to continue?
Good afternoon, yes. I was talking about the returns of the past. 13% CAGR for 10 years. It is something like that. India has been moving for the last many decades, and some of the decades have seen much higher returns. Now, I just thinking about Mr. Ravi Mohan was talking about risk. He was talking only about the risk. So I was really wondering, am I missing something in my life? Because he told life is full of risk, and life is all about managing risk. मैंने तो अभी तक सोचा ही नहीं. I never thought of risk in life or risk in the work I am doing. Maybe because I think Ravi sir is from RBI background, where he is supposed to find the risk around. And today, there's small microfinance firm, of course. Risk is very predominant and a very important aspect. I don't see that kind of a risk in equities, even though I think equity is considered to be a risky instrument or a risky investment avenue. I am talking about value investing. When you just talk about equity, it can be used for trading, gambling, or all those kind of things. But the original aspect of equity is about investing for long term. Understanding, you are buying the ownership in a company, and how this company is going to perform in the next 2 years, 3 years, and 10 years. So that is called long-term value investing. So that is what the ultimate thing I think everyone should use equity for. In that case, I haven't seen a risk in equities, which is very wrong to say. We have respected, I think, Mr. Rohit from NSC. He will totally disagree with that thing. I think investing for long-term, without looking at the very short-term aspects of markets and economy, I think it really makes sense. Nothing else is going to be as good as equity. So 13% CAGR, it's something amazing when you grow with the CAGR in a compounded manner. We have got some of my colleagues here. We had 22 years of equity intelligence, the journey of 22 years doing value investing. Our CAGR is around 21%.
Wow. That deserves a round of applause.
So the 21% CAGR means when you put in money, it's very huge. The benefits, considering the inflation or rupee depreciation, anything, this can overtake anything. So somebody invested 10 lakhs, did not do anything till today. The money has grown to something like 6.5 crores. 7 crores, almost 7 crores.
10 lakhs to 7 crores.
10 lakhs to 7 crores. That is what equity intelligence has delivered in the last 22 years. We are very proud of it. Anyway, so market, I think it will continue its journey. It will continue to reward investors with the same or a better kind of a return. I strongly believe, the next 20 years, we are talking about 2047, the Amritkal vision, all those things, about a $30 trillion economy. Of course, some people started talking about overexcitement and talking about $50 trillion economy. I don't know about that, but a $30 trillion economy is possible. So the next 20 or 25 years is going to create more wealth than perhaps the last 75 years since independence. So that is all about equity markets when we look forward. I think I answered your question.
Yes.
Yeah.
So I want to look at the current scenario also. So FIIs, they've been selling massively over the past 1.5 months. I think they've sold around 1.4 lakh crore worth of equities. So do they know something that we don't? What is happening?
Yeah.
Should we be concerned?
It's a good question. I think a lot of investors, people in the market, they're concerned about this continuous FI selling. In the last few weeks, something like 4 lakh crores. I think it's a peanut amount. When we talk about a $4 trillion economy and moving to $30 trillion economy, it's too small an amount by all the FIAs who have invested in India selling or buying. It's nothing. 1 lakh crores or 2 lakh crores is nothing. The last month we had the highest ever. What is that? SIP.
Yes.
What is that?
25,000 crores.
25,000 crores. 25,000 crores. Yeah. So that means around 6 lakh crores. 3 lakh crores. I strongly believe within next 2 years or maximum 3 years, this amount is going to be at least 50,000 crores a month. More and more people are going to take part in India. We have really democratized stock market and investing. It's something amazing, one of the best trading systems in the world with a T+1 settlement system, clarity, safety, no need of risk about brokers. There was a time 20, 30 years ago, Mr. Prince will be watching for that, People buy shares or sell shares, whether you sell shares, whether the broker will give us money or not, we are not sure. 2% commission. So we have moved a long way and we have become number one in the world. The kind of most modern digital trading platforms and the systems and processes. And the regulator, thanks to the regulator, the way they have been taking, the risk management or whatever we call it, this is amazing. So everyone, even out there with 10,000 rupees investable fund, today can start investing. And people are doing it. I see a lot of people around me, even people who, daily workers, started investing. It's so easy. You need not go to the broker and sit in their place and, beg for their mercy to buy, sell shares and all. So we have got super fantastic systems. We are ahead of US, which is the most sophisticated economy in the world. We are ahead of US in many aspects of capital market. Am I right, Mr. Prince? Yes, anybody will watch for that.
Mm-hmm.
Yeah.
So another thing that's interesting to watch out for in the coming months is the return of Donald Trump as the US president. How do you think that will affect Indian markets?
Maria, is it a political question or she'll be worried whether I talk, overboard. Anyway.
Since it's Donald Trump, it's fine. I think you can speak.
I believe Donald Trump winning the elections in the US is good for the world, good for all the good people in the world. Those peace-loving people, those who want to live comfortably and peacefully, is very good for that. And coming to the economies or the stock markets, investing, it's a very different, and I'm not very excited about that. Because when we talk about India may have many negatives and positives in this regime change and, the policy changes in US. There may be some exporters could be affected with tariffs. I'm not an expert, but I feel there will be negatives and positives in because of this Trump win. But the geopolitical aspects are very favorable to India in general. India is at a sweet spot. Whichever geopolitical formations created anywhere in the world, India will be the most prominent element, part of that formation. And nobody can ignore India in investing or in the geopolitics or any aspects of the world. India, we have been always powerful. We are the largest democracy in the world. So it was always there. But in the last decade, we have really, the world has started recognizing that. They are becoming more aware about it and they are recognizing. So we are most powerful today that way. So if, I was talking about if we can buy cheap oil from Russia and at the same time be a good friend to the US So it shows our power in the space. There are many such things happening. We are not under anybody. Nobody can dictate terms to us. We are very powerful today in the whole world.
So up until a month ago, a big concern for investors was the valuations in the market. So were you also finding it hard to deploy funds? Were you finding it hard to find value in stocks at that level? And is it better now?
Yeah, I think this is a very most important question when it comes to long-term value investing. We have to go through such periods of time. See, anybody in this hall would have been, skeptical about the way markets have been moving in the last few months. I mean, earlier movement. So, which is reflecting in the recent past. The way whenever there is a bull market, these what you call cycles, a bull cycle or a bear cycle, it always go a bit extra for that. Sometimes not just a bit extra, maybe 30-40%. It goes extra. Either side. This happened in 2020 or 2018 when the small mid caps went down. So I remember some of my stocks, which was priced, we might have bought it at 70-80 rupees. Just before the crash, it was 100 rupees. It went down to 10 rupees, and which is now 400 rupees. So this is how Indian markets have behaved if you take the time from 2017-18 till today. And the last 4 years was very peculiar, very, very special for investors. I have been in the market for last, now 1990 I started my career in the stock market. I started as a floor trader in Mumbai with Kotak Securities. I came back to Cochin in 99. So my 34 years of experience, the last 4 years, there is no period of time where investors could create that kind of wealth. This is amazing. Even the index doesn't show it. Those who have been investing directly with some little common sense and some wisdom and a basic knowledge, they have created wealth. Even our PMS, I think it has moved by 7 times and 6 times in some cases in the 4 years. From that bottom I'm talking from the COVID bottom. Even before, the previous years were also depressing to small and mid-cap investors like me. So in India, I feel we should look forward very positively because we are talking about that $4 trillion economy moving to a $30 trillion. If that happens, again, if the economy moving to $30 trillion, we are going to be at least $40 trillion market cap. We are talking about a 10 times, a 10 bagger in the broader index and kind of system. And if that happens, there will be a lot of people like Prince and Akshay will be making at least 50% more CAGR on the Nifty and Sensex. So imagine the kind of wealth that can be created. So I think I am bullish in Indian markets like than never before.
So I wanted to switch from macro to a bit of stock-specific questions. So Raymond has been a very standout performer for your portfolio manager, and it's made a lot of money for your clients. What is the rationale behind picking Raymond?
I think last year we discussed about it. I'm not very sure. Yeah, Raymond was one of our largest holding. So I have been, sometimes used to compromise on the, Sri Ravi Mohan was talking about governance risk.
Yes.
But I sometimes like governance risk and I accept that and I don't try to manage it. I don't know what is meant by managing the risk, but so Raymond had a big issue of the perception about the promoters, the management. I think we started buying the stock when his father wrote a book that he was thrown out of home and he was staying on a rental small house kind of things. So I found it as an opportunity. The market cap came down to 2,500 crores of Raymond. And Raymond is not many, some of you may be misunderstanding Raymond as this textile shop where you see all the showrooms. That's only one vertical of the 5-6 verticals of Raymond. They have got more valuable business than this lifestyle business, which is now recently demerged. They have become 2 companies. So we went up to more than over 4% of the stocks we picked in PMS. We are a small portfolio management firm. Now these, people from Mumbai they are accustomed to large fund managers mutual fund managers or even portfolio managers who manages $1 billion or more kind of things. So going to that kind of a concentrated bet, that's what creates really wealth, you know. Sometimes we had an underperformance in the 2018 period of time. So to overtake such things, maybe this kind of a little extreme steps required. And the stocks from 2,500 crores market cap, it moved to 25,000 crores plus in 3 years' time. Now it is given a small correction. We are still holding most of
I
that.
think if you include the demerged, there was another company as well that was listed. I
Both
think
companies are almost equally
it was
valued.
30,000 crores. It went
So your
to.
question was about why. So because the negative news and the governance issue and the market perception, an asset which I believed is worth 25,000 crores, it started trading at 1/10 of it. So it's an opportunity. Now if Mr. Gautam Singhani is my very good friend now, I think he'll see me like an elder brother. We meet very often. He was very thankful. He has been very thankful to support him during his bad times, even family bad times. He had an issue with his wife. It's all publicly known. But there is a business running. Just one man cannot run such a huge business. There was a team. There were 5 CEOs when I started investing. I met all of them. Some of them came to meet me in Cochin. And after a few months of me acquiring this stake at 2,500 crores market cap, after a few months they sold their smallest division, Raymond Consumer. They sold it for 2,840 crores. Imagine. The office building of the company is valued at 7,000 crores. And they have got a real estate worth around 15 to 20,000 crores. Their engineering division is worth at least 20,000 crores. All these things together, the market was pricing at 2,500 crores. So that's an opportunity. And how can he be a worse person? According to the perception. So that is so I found this very interesting. It is the foolishness of the market pricing it at 1/10 of its intrinsic value. And now it's paid off. And he is motivated with this. What is happening? One big change happening in Indian stock market. The small promoters or some of those not so professional promoters, they are getting motivated to create wealth through the market capitalization than siphoning out a little money here and there, or I think RBI guys, they know it far better than us. So there is no incentive today to be a bad promoter, to siphon out money, to convert black money, all those kind of things. So if you do the right things, India is giving such a great opportunity in this economy. Why not create wealth through the market capitalization? That's the biggest incentive. And create wealth for the promoter's family, for the next generation. So I think everybody is sensible. There are some people still to change. Most of them are changing. They are understanding this. Everybody wants to create long-term sustainable wealth through market capitalization. This is the biggest ever good news for minority shareholders, because they will get a part of it. Otherwise, when the promoters siphon out money, the market cap stay depressed, he go on enjoying the wealth. So that times are over. So, and thanks to the regime also, the Modi regime. I'm a big fan of this regime since 2014. They also trying to do, that governance in place. They are trying to do a rule-based economy. That's very important. So things are changing, but we have long way to go still. There are still a lot of imperfections. There are loopholes. I think we don't have much time. Please.
No, I think we can extend a little. It's okay. So you talked about Raymond in the PMS. In your personal portfolio, you're known to invest in the smaller companies as well. What has been your biggest wealth creator in your personal portfolio?
I sometimes do very casual investing. It's not trading actually, because in the very small, I do some micro caps also. So there are instances where I invested and the stock has moved by 60, 70 times in 3-4 years since this COVID law. It's not only me. Many people have this experience. I think a lot of people now.
What is the name of the stock?
One stock which went up by some 50 times is PTC Industries. I bought the stock at some, I think my name also came some 450 rupees per share. And in the bulk deal, my name came. I think the stock price from that, it went to something like 30,000 rupees. I had a bonus. And now also it is quoting at some 13,000 rupees. I have recently exited the stock. Okay. So it's not just me. I'm telling you, hundreds of stocks have gone like this 10 times, 20, 30, and 100 times in 4 years. So that is something amazing about Indian market. You have any questions?
We can push it. It's fine. So, what are you buying now, and what is the rationale behind it? Can you mention a few stocks you're buying?
Now 340, 350 over here.
I think people want to know what you're investing in now. So I think they wait. It's fine.
One of our fund investment was, latest pick was Protein, which moved also well. And despite the market correction, that's staying very strong. That's NSE promoted company. So we hold nearly 4% in the PMS. And another something similar. Can I tell the names, George? Okay. So it's our Indigene. Indigene is a stock we are still buying. Something very interesting. But this is, as Ravi sir told, risk is there all over. So it's a very interesting company, which is, they are into the new gen AI helped kind of aspects in the pharmaceutical business. It's a global company. It's a technology company, but catering to the pharmaceuticals, helping the research and development and marketing, many other aspects. So I find it's a bit futuristic company. Otherwise, we are not very active. We don't do a lot of churning in our PMS. We are very happy with long-term value investing. So we have to go through. So the thing is that everybody in the sitting room may be aware. A few months back, market was overvalued, and even today I feel after the big corrections, I'm telling you, 50% of small and mid-cap stocks are overvalued today. It's what I feel. So just because I do invest in small and mid caps, I need not be always bullish on that. But there are stocks to pick. That's why I told you, I think, in the morning. Yes. India is a stock picker's paradise. Whatever is the index, whether it is undervalued, overvalued, it is true. If it is undervalued, it was a bear market, and near the bottom of the cycle, it's very easy to pick stocks and make money. That kind of a situation is not there today. You have to work hard. You cannot do just casually invest because somebody told you, some tips came or some SMS came. You should not invest like that. This is next 1-2 years market can be like this. I don't expect a big uptrend in the market in the next 1-2 years because of the valuation metrics.
Okay. I want to quickly touch upon two asset classes you've had strong opinions on, gold and cryptocurrency. Has it changed? They've done well recently. Has your opinion changed? Gold and cryptocurrency?
I don't know about cryptocurrency. Even if somebody say, this Bitcoin, they can give me at $1 per Bitcoin, I will not buy it because I don't understand this. I don't see any fundamentals in that. So the other things I'm not committed enough to talk about it. Gold also I don't like. We are not wearing any gold. My wife Litty is there. So we need not worry about thieves coming home and taking away the gold. We don't have any gold at home. See, gold again, it has no fundamentals, but it has got some other kind of value. It's rare. I don't believe in such things because life is very short. If I had a 2,000 years of lifespan, I would have probably thought about some gold kind of things. But it is not. Unfortunately, we have very short lifespan. It's 80, 100 or 120. How much you're looking for, Maria? So within that, there is a lot of limitation. So let's enjoy life. Don't bother much about the risk, what Ravi sir was talking about. So I think it's a great time for equity investors in India, and it will continue to be there. He's waiting for the...
I think one last question. Yes, one last question before I open the floor to questions from the audience. So you mentioned 21% return over 22 years. Is there a way that small investors can benefit from your expertise? Is there a mutual fund plan coming up?
Oh yeah, I think it's a good question. We have an ambition to start a mutual fund. We had thought of that few years ago, and we had even applied for that. Then we withdrew this thing because we thought we are not ready for that. Equity Intelligence is making a new building and some infrastructure and more people in the team. So we may take a decision maybe in next 1 year to apply for a license, not immediately. Anyway.
So I think we can take a couple of questions from the audience.
A gentleman here has a question.
What has been your strike rate? Like when you invest in 10 companies, 10 scripts, what has been the success rate?
It should be in the micro small cap personal investments. There could be 7, 8, but in PMS it could be 9, because we do more due diligence and risk management kind of things. But when the strike rate is less, actually the other 6 or 7 stocks, they go multi-baggers. So the return will always be in the micro caps for me. That's my experience. Anyway, a value investor will always think of the basic value and fundamentals, even if it's a micro cap or a chore company. I am the only one who used that word in the media, and I have been criticized badly for that. People used to write off because of the unprofessional attitude or some events in the company. But if it's a deep value, like Raymond, why not? Take a chance. Anyway, we are taking risk by equity. A lot of uncertainties ahead. So this is where you create multi-baggers. So wish you all a fantastic value investing time. Anybody else?
One last question.
My question is, there are individual investors, normal individual people, and second one is about the investment companies, maybe like yours, and third one is about a company which have a different business, maybe an IT company or maybe other companies. So what is your advice on them investing apart from their business? They keep it as reserves in other, and so how do they have to really look at it, investing in some portion of their fund, in the stocks.
Other than stocks?
No, maybe in the SAP or mutual fund or the
Okay, exposure, the percentage of exposure to equities.
Yeah. Maybe like for example, you are a business investment company, right? So there are other companies like which is their business is in a different level.
Yeah.
So they also keep the reserves or investment. To what extent, for example, if they take their profit portion, to what extent then they can invest in equity?
I feel somebody in India, we are lucky to be in India at this point of time, to be born and living in India. Looking at the economy and its future trajectory. So the future trajectory of the economy is something we have, and these companies are also going to be like that. You have to see those companies and businesses, growing at that kind of a pace. So I think 20 to 30% of the savings for an average person should be in Indian equities, whether somebody is small or big. That's why I told it's the democratized capital market investing world is something very special only about India. The way we created all this the public digital infrastructure. Nowhere in the world, no USA, no European countries, no Japan, nobody is anywhere near to us. When we say democratized, take UPI. The richest man to the street vendor out there can all use similarly. Even through our UPI, even Mukesh Ambani can transfer only 1 lakh rupees. And the street vendor also can transfer 1 lakh rupees. It is amazing. There's nowhere in the world. The way we created CoWIN app, we don't know because we enjoyed it and we experienced. We don't know what's happening in the other world. This is amazing. The way we created, you get vaccine and it is recorded and you can take printout. No America, no US, no developed nations has come anywhere near to us. And with such kind of a challenging 1,400 million people population, poor, middle class, and all the kind of classes are here in India. So we have done a wonderful thing. The macros are managed wonderfully in India. I would say in the last, of course, we have our non-aligned policy in the geopolitical world out there. And that has been traditionally, not just this government has done it. So all these things are helping us today. And we have all the reasons to be optimistic about the economy and investing.